Good morning, everyone. This is another episode of the ProAMT Traders Digest. It's 13th January 2017. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All systems, indicators, strategies shown here are for education purpose only. All levels discussed here are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any investment or trade decision based on anything that is discussed here. We will not be responsible for any resulting profits or losses. So let's have a look at what Nifty did. Open outside the range, opened above the high of the range and pushed back down. IB of 19 and around 14, so 19 and 13, so around 32 points initial balance going into this high volume node. So what I'd expected is it pushes through this high volume node, repairs this anomaly into the 77-75 kind of zone, and then push back up and either find consensus above the range or trade above the high of the day. But it got halted with a auction failure, a one tick failed auction. Now few people who are following the 915 database would not have got this failed auction, but I got it. So auction failure and fails on one side and reverses to the other side. So a classical reverse to the other side. But meantime, when it was getting exhausted here, I again attempted a sell because there was a nice micro balance there and a breakdown after two no supply bars. So the reason for selling was that it might go into the range back for checking the buying interest. The trade fell short of 50 points and had to cover in 12 points. Apart from that, very balanced day. The fairest price exactly centered. And let's see now what it has done on the 3-minute chart. So here the volume candles are of 3 minutes and we are watching the 1-minute chart to see what is happening within that time. Opens, pushes down in the opening swing and pushes back up, makes a nice balance. Let me mark that. So a nice balance here and breaks down from that balance. Comes again, rotates here for a while after this failed auction, tries to find consensus in this zone. Now a very choppy auction around the day mid. When this was happening, I'm very bad at trading such formations because when it goes and chops into the day mid, I can't make out whether it wants to go higher and check this balance or whether it wants to just go to the developing value area high, reject there. So that is what it did. It went into the value area high, made a nice micro balance there. again came back to test it, and then a failure. The delta was going positive and I didn't want to take that risk, so I waited all along till it came into this balance. Now when it was here, the probability of going into this balance was there. Excuse me. But I didn't want to take that risk of selling it when there is not enough supply available, because if you see, the volume is dropping consistently, so not much consensus in a fall or a rise. So the momentum in the move was not in tandem with the volume, and when the scenario is like that, I prefer to stay away rather than burning hands. So after this touch, the delta was positive, and if you see, there is a divergence here. So there I thought that once we get a confirmation, I will try to go long and see what happens. Till here I was not confident, and then from here created a long, and when it went into this, I had to like book this out. So that was a thought process, that suppose if I am now, the chances were that I will not get 16 points in this trade. So the fear of not getting those 16 points is what led me like sell into this spike up, then no supply. If you can see, these bars are no supply bars. It's a negative bar on 3 minutes, so that's why on 1 minute, though there are positive bars inside, but on 3 minutes it's a negative bar, and this breakdown was the selling point. So from here, expected 16 point rotation. Now my order entry to 16 points was just like 0.5 short of this low, and then when it instantly pulled back, I thought now this is gone and need to cover it. So that was the end of the day for me. Now this, I could have played this because stopping volume into the lower balance point of control. So a very methodical auction, coming back, closing this point of control, and then making its way up. Could have played this, but missed this opportunity. Also, the 230 guys were in a mood to take it higher, because it was continuously like again the same pattern, making higher highs and higher lows and a channel move up. Now let's have a look at the Renko chart. Let me delete this first. Now on the Renko, we have a open outside of the range, comes back into the range, finishes the process of making the low of the opening swing, and after this opening swing range is made, goes and breaks that range, creates a minor balance there. So this is the minor balance at the highs, and then breaks down. So a very clean impulsive breakdown, goes down in an impulse, and then W formation here, and a rotating very confused move up. When it went into this mid, I thought that it will extend down further, but the way it was taking support into this was no point selling into that rise. So a very confused move on the Renko. The range was like whipsawing here and there, was not able to find impulse apart from this impulsive move. And even this impulsive move is like it's losing momentum. The moment it rises a bit, loses momentum, again tries to go up, fails, comes back. There's no impulse anywhere. So when I don't get impulsive moves during the day, there is a higher probability that I will not be able to enter a trade. And there's no harm in not being able to get into a trade. It's better to not get into a trade rather than just losing on some confused trade setups. Let's see what it did on the 15 minutes. So opens, comes back down, the sellers getting stuck, goes up, buyers getting stuck there. And I made a video for this, and there I've explained this concept that why does this phenomena happen every day, that the buyers get stuck at the highs, the sellers get stuck at the lows, and why is it happening every time at important references. So that is the kind of behavior that happens every day because of the human mentality of going long in a rise and going short in a fall. Now there is a method of selling the fall and method of buying the rise. But if you just like jump in when the entire herd is going short, it's not going to pay off. And on top, now this one rise creates negative order flow, and apart from that, no negative order flow at all. So again, these sellers would take exit when it's coming into their range again. But again, you see, they are not happy with their exit. They want to go short again. So it's not that they would be the same people who sold here. They can be anyone. But what we can make out from the chart is that there are sellers getting short and they are going to get squeezed. Now, sellers getting squeezed above this move is not a sign of strength. The move is occurring just because they are doing a short covering move. They are forcing these sellers to cover their shorts, and that is not a sign of strength. Strength is when it's a one time framing auction, slowly going higher, like it happened yesterday. A very good trend day, like it goes, pulls back, up, pulls back, again up, pulls back, again up. So this methodical auction is where there is new business coming in and the buyers are buying it. But if it's happening like a range is forming, if you see consensus building up in this range, goes up, that is forced short covering, again falls back into range, long liquidation happens, again a range, and then again a short covering move. So this is not a sign of strength. This is just a sign of neutralizing the inventory. Now, neutralizing the inventory, it can the next move can be a trending move up. So this can be the reaccumulation phase in as per volume spread analysis, or it can be a distribution phase. Now, what this was exactly, that we'll come to know when the market opens the next day. We cannot come to know when this is happening because the market closed right into the short covering zone. Now let's have a look at what we can expect today. So I had the expectation of hitting 8440, which actually SGX has hit today, but that's of no use for us. So in case tomorrow we again the same thing, we open above the range, then we expect that it pushes back and then makes its way to 8440, and at 8440 I want to see if it pushes back up into 8440 and then falls back down, and if it's falling back and creating a minor balance, or if it's giving no demand into this zone or giving no supply post the spikes, I would like to sell that move for intraday and would expect it to first go into this 410 or 415 zone, and then later if it finds consensus here, then push into the previous day's high as well as the high volume node. This entire range is a high volume node, so anything below 415 I would expect it to go to around 405 and then 400. So that is the likely scenario. In case it opens directly gap up above 8440, then I would see what it does there, and again the same thing, it pushes down into 440, I would want to sell it for intraday. Now, depending on the opening swing, I will decide what to do, because a very dicey zone here in this entire zone, this 20 point zone is like place where we can get a good trade for intraday purpose, but don't want to like risk it directly based on just the open. It will give enough hints before we can initiate a trade, because it might happen that what if it opens here and directly like pushes down into the range. I would be able to execute the trade, because there is just opening and instantly falling down is not a sign for me. I'm not a robo which can directly like execute trade at 9:15 and 2 seconds. The second scenario is that it opens in the range, in the value. So almost near the settle, tries to push back above the highs, fails and starts coming down, tries to push into the 400 zone, pulls back and then makes its way down into the, again the same thing, break of this 86 and go into the 75 zone and check for the demand there. So yesterday's hypo, which I thought that this will extend into this and find buyers here and then push back up, so that would come into play. The third hypo, it opens around the mid or even in the range, pushes down, tries to go up above the high, fails and then tries to rotate here, and if this rotation fails to find any supply, then again push back up above the high. So that can also be the scenario. It's not necessary that if it opens within the range it won't be able to go up or go down, because it has created that balance, it has negotiated the price higher and now wants to make a move outside of the range preferably. Now let's have a look at Bank Nifty. Open inside the range, so again the same thing. We had thought that either it opens above the range or opens in the upper balance of the range. So it opened in the upper balance, tries to push below. This is what I expected for Nifty, that from that upper balance it pushes down, so we come to know that there is nothing below. So it same behavior like Nifty, failed auction, and repairs this anomaly in which is at the previous day's close, and then makes its way up, compresses, tries to break out, again breaks down, tries to go below the point of control of yesterday, the upper balance point of control. Apart from that, there is no value in the previous day, so don't get into this value area because there is no value whatsoever. There's value here, a bit of consensus, so micro balance here, 4 TPO wide point of control. So pushes down below that, a failed auction below that, and that failure leads to others look at the other side of the value developing value area. So goes there, fails, and settles just above the developing point of control. So closing almost at the fairest price. It is trying to find consensus higher. Now the weak point in this is there was an expiry, so they were trying to like eat the option premium. But on the other hand, this trend is so elongated that either it will balance here, and because the auction activity is the price relative to time, and if it consumes time, then we will think that it does not want to repair these anomalies right away and might make its move up into the 19050. So that is the likely scenario going ahead. We'll discuss that in detail in the hypothesis. Let's have a look at the 1 minute chart meanwhile. So opens into the range, directly pushes up, creates a balance. Again, this is a weak reference, a short covering. The market is rising due to short covering, loses momentum into the rise, and falls back down. Now falls back into the late afternoon balance, a fair price here. Checks that, again fails. If you see, it makes a low, tries to move back up, comes down and gives a failure. Now this failure is what you want to buy. So stopping volume and then a test, a very nice test with no supply. So that is a sign of buying. Goes back, creates a balance. Now when this balance is happening with higher lows, this is a sign that it's going to break out. Now it breaks out, goes to the VWAP, and also it is this the fairest price of this micro balance. So goes into this congestion, falls back down again into this congestion zone, creates a very choppy move here, and then again gets into a choppy move. Very difficult to trade these choppy moves because either we have to trade this entire balance, or we need to be like very fast in executing the trades and have to get out also fast. Goes up, creates a balance again, fails to push higher. See, goes and closes this. So very if you look at it in the day terms, it's a very methodical auction. It's trying to find balance on both the sides. It's testing on the edges and then reverting back to the mean. So again comes back down, falls breakdown from this entire trading range, finds a stopping volume again. Sellers were getting stuck here, and finally they lead to, again when they go here, they start selling back in. So this entire zone has been sold into. So now this selling can also be the exits of the Thursday expiry, guys. Not necessary that this is a negative order flow. The order flow needs to be treated with context and not with just green and reds. Because if green and reds were to make profits, then I don't think that anybody would be losing in this market, because these indicators are available everywhere. They are not very expensive, so people can like apply just a part of the capital goes into the investment in the software, and then you just program one indicator that you see green and buy, red and sell. But it doesn't work like that. Now on the 15 minutes, again the same thing, a huge bar, a wide range bar coming in, and then indecision, a doji. That means that there is no consensus left to push below this low. But on the other hand, it's a very mechanical level, very visual and mechanical. They are looking at this lows and trying to protect it. So that is another sign of weakness. It is making it more weaker, and that might be the reason that the when the rise was coming, it was being sold. Now let's have a look at the Renko chart. So opening swing breakout makes the swing high and a swing low, and a breakout from there finds consensus. A false breakout out of that zipper fails and pushes into an impulse. Very nice impulse, and a very methodical move into the day mid, and then impulse down. Now when this pullback came, again the expectation is that it will create the third impulse, fails to create the third impulse, and then makes its way gradually up into the day mid. Now what happens is, when the day time frame is in control and when there is no opposite force in the middle, it keeps on it gets very choppy in near the day mid and the VWAP and the developing POC. So the OTF or a time frame higher, here I'm not talking about the OTF who will give a move of again 1,000 points like yesterday. I'm just talking one time frame higher to those guys who are playing within the IB range. So those guys would see unfair prices and react immediately. But apart from that, it will be just a chop. So let's now see what can be the likely scenario for today. So if we open above this range, push back up, so either a gap up or even in this range. So let's consider that this is a gap up, or and it pulls back down into this congestion, does not find any supply, and starts its move up into the 19,050 zone. That can be one likely scenario. And suppose, let me shrink this chart. Now suppose if it opens somewhere here and immediately goes into this, goes above that, fails, then I would be looking to create a short. If there is a balance here, I would be looking to create a short for the reversal to this getting back into this zone. So that is the likely scenario here. And in case if it starts finding acceptance into this zone, then maybe push further down into the highest volume node or the fairest price as per the volume. And the day mid is also situated here. So that is the likely scenario for the hypothesis, primary hypothesis. And also, in case if it's not creating a balance and not breaking down from here, then I would still watch for it going higher. There is no way that then we can stop this. It can still keep on going higher. So then if this is a failure, or if even there is a balance into this zone and a failure, then I would like to buy it first for the primary target of this, and then again a failure, buy it for a target higher than this. So that is the first likely scenario which can play out. The second scenario is it opens into the day mid or the fairest point and then decides where it wants to go. It goes above this, just above this, and fails. It stays within the range, again tests back, returns back, goes to the lows, breaks this double lows, because there is still the day low is below that. So breaks into this, again pushes back to the mid, and then falls back down, breaks this high, and tests the demand into this 18,800 zone. That is the likely scenario if it opens inside the range and does not find any demand on the upside. The third scenario can be that it opens and stays within the range, keeps on chopping, and a very messy move. I don't want to even think about that, because there is no point just making scenarios based on the chop, because obviously when it's happening also I will not be able to get into a trade. So analysis for me is not just for the sake of it. I'm only doing what I want to trade, what is the probability, what I'm expecting, and what can be see, there can be 10 different scenarios as per the theory, but what I am comfortable with is when the auction is orderly and when it is giving me entries with a spike and a test at reference levels, it is creating micro balances and failing. That is what I have been practicing. So I want that kind of formation happening to enter into a trade. Just by learning and just by talking about how the market would behave would not let me just enter into the trade. It will be just like talking but not trading. While we are here, let's have a look at what the sectors were doing during the day. So this is if we like consider the entire January from the first trading day, CNX metal index is 9% up already. It's leading, and the IT was lagging a lot, and now IT is also in the positive territory. It's above the open of January first trading day. So overall, all indices are trading in the positive territory from the January open. This is the second week of January. Consider this somebody following initial balance of the day. This happens to be the initial balance of the a month, maybe the first 2 weeks. So might decide the range in this week, and whatever high happens in this week would be a nice reference going ahead into the next week. Small cap is 5% up, and the lagging one is obviously the IT, pharma, and the FMCG. The consumer, finance, service, and what is this hidden one? The CNX 500, all are clubbed around Nifty with 2.5 to 3% gains. And the leading ones are mid cap, infra, and metals, bank Nifty, mid cap, CNX, PSU Bank, and the media, all above the 4% range. So this just gives an idea that if somebody is trading long or short in a particular stock within a sector, so just look at the sector, how the stock is performing compared to the sector. And also, like yesterday, suppose we had been doing the initial balance range study that now today's initial balance was just 33 point some points. So when the IB range is 32 to 34 points, there is a 5.8% chance of it extending 1.2%. So 120%, so 1.2x. So that is, you divide this by 100 into 2. So you get a 6-point breakout. There is a 5.8% chance. And if I make this a 50% breakout, if you want, if I make this 1.5, then there is a 5.2% chance. So when there is such IB, we can make out from that only that the moves will be choppy, and it's better to fade the moves on either sides. So I just use the statistic to just get a hang of what can be the scenario in those circumstances. It is not that I would like enter the trade exactly at the statistical levels, because this is just what the market had done earlier. It is not necessary that the market will keep doing that, every time and every day. So tomorrow also, if in case the IB is of that sort, and if the market is not finding consensus any side, I would still prefer to stay away or just fade the moves. No point risking huge size into this move. So I think that's all for today, and have a profitable trading day ahead. Thanks for watching, and we'll catch up on Monday.